Thank you very much for this presentation. And before I start, first I wanted to thank the organizers of this conference for inviting and for your hospitality and for this lively forum. Thank you very much. Let me first say that I prepared this presentation specifically for young entrepreneurs in mind, those who are thinking about or maybe have established a company that is planning to become another disruptive fintech startup. And maybe some of my data is overlapping with the previous presentations, and I'm sorry for that. And I'll try to skip those slides very quickly. But basically, my overall let me first actually tell you about our company just a little bit. The Silicon Valley Innovation Center has been around for now 5 years, and what we do, we provide what we call corporate innovation as a service to large corporations from all over the world who want to come to Silicon Valley to learn about the new technologies and emerging trends. We help them to establish innovation labs, and also we provide a whole range of services. We also work with overseas companies that would like to come to Silicon Valley in order to, again, to get connected to investors, learn about the innovation ecosystem in Silicon Valley. And if any of you are interested in visiting Silicon Valley, and if you're searching for investment, please contact me. I'll be happy to see if we can help you with, connecting you with the local investors there in Silicon Valley. Or just visit our website, and we will be happy to help you. It's my second visit to South Korea. The first one was about a year ago, and I really enjoyed the previous visit. And this one looks to be even better than the first one. I'm coming from Hong Kong and Guangzhou, where I participated in 2 similar conferences over there, and it looks like there is a huge demand for fintech as a trend is gaining momentum here in Asia, and I will show you a little bit of data what's happening in Silicon Valley right now about fintech. So what we do, as I said, we work with a lot of companies from all over the world who want to come and get connected with the local companies in Silicon Valley. And we organize educational programs for those companies, but also help them set up their innovation labs. Just by the way, very quickly to tell you, we are hosting a conference called Banking Disrupted, specifically on the impact of new technologies on banking in September 14th, 15th. And it will be featuring probably the best fintech founders or CEOs of the best fintech companies from Silicon Valley at that conference. And if any of you, again, would be interested to attend that conference, you're very welcome to approach me, and I'll be happy to help you out with that as well. It will be on the 4th, 16th, 3 days of September this fall. Now, let me first start with the general overview of the investment trends in fintech. If you oops, sorry, I have to click a little bit. So these are just a few photos of our programs. This is information a little bit about our Banking Disrupted conference that I mentioned to you. And now let me give you a little bit of data on the investment trends, specifically on fintech. Coming out of Silicon Valley. Actually, this is the global data right now. Most of the data that I will be showing you is, by the way, is coming from CB Insights. And it shows that 2015 was the record year in attracting capital, venture capital specifically for fintech deals. And as you can see, there was almost 1,200 companies financed in 2015 alone. The last quarter of that year, And before I move to that, let me just show you a little bit of geography of where the biggest deals were financed. As you can see, most of those the largest deals are coming from Northern California, particularly Silicon Valley, but also Southern California, a few deals. And the rest of them are coming from China. When we look at, sorry, I need to remember switching slides here. So this is basically the map of the largest deals that have taken place in 2015. And as you can see, the purple color stands for the deals that were taking place in Northern California, and the green ones are in China and India. The last quarter of that year actually saw a bit of a slump in investment, and a lot of people in Silicon Valley started talking about the end of the bubble. There's a lot of discussions right now in Silicon Valley about how much the entire technology investment area is being overheated right now. Fintech is obviously being a part of that. So in the end of 2015, there was a lot of talk that perhaps this bubble is kind of deflating now. But when you look at what the amount of investment that has happened in the first quarter of 2016, it just doesn't look like the overall flow of investment has abated in any way. There has been even more money put into the fintech companies than in the previous year. Well, certainly by the end of this year, we will probably see the record amount of investment that will have taken place in fintech. What is the message for those of you who are thinking about starting a company or maybe have started a company in fintech? Well, the message is very simple. The investors are still willing to finance the new businesses or finance the ones that were financed before, and they're providing additional rounds of investment. And this is a good news for you if you are thinking about raising new rounds of investment. The kind of not so good news here is that when the valuations are very high for companies, for a company that you would represent if you want to come and raise new capital, just looking at that from a historical point of view, the chances of survival of these companies are not so high as if you started a company where the valuations were actually low, which is a kind of interesting observation, which is counterintuitive to think that if your company is valued low, then perhaps you don't have that many chances to as many chances as the company that has much higher valuation. But historical data actually shows the opposite of that. Again, the changes that have taken place over the last quarter are such that when you see the 3 out of 4 largest deals have taken place now in China, not in Silicon Valley, which is another interesting trend, which was pointed out before, that perhaps Asia is now becoming the center of attention for the global deals in venture capital. Somehow, I am not sure about that, because if you look at the entire volume of financing, Northern California, but actually the United States, generally speaking, including New York, are still dominating the overall volume of investment here. Who are the major investors among the companies who, among the VC funds who are financing new deals? Again, this data is important for those of you who are thinking about raising the new rounds. These are, let me move, so this is, let me get back very quickly. So this slide shows basically that if you can see from out of 4 largest deals, 3 of them were financed in China, and the rest of the majority in the US. This is the list of the most active investors in fintech, specifically in the United States. If you and as I said, the reason why it's important to know all of them for those of you who are thinking about raising new rounds is that these companies are most likely to talk to you if you are raising new round of capital, and if you want to move your business or open an office in California, this would be the ones who you would want to talk to. We work with many of these venture capital funds, and if you would be interested to talk to them again, we would be happy to help you get the introductions to them. So now let me just very quickly move to my next slide. This is a very kind of a famous slide that CB Insights has put together about the way how the new startups are now trying to unbundle a bank. Unfortunately, here you cannot see the top part of that, but it's okay. Basically, you can see that that there are lots of startups now that are trying to basically attack the existing banks along different lines of business that were established by traditional banks. And this slide was actually created about 3 years ago. When CB Insights has updated this slide, it now looks more like that. You know, when there are lots of more players now in the field who are trying to work to create the alternative services to the existing banks. The one which is, you can see in the center, it's actually Wells Fargo Bank. It's one of the largest banks in the United States. And Wells Fargo is trying to innovate itself very hard right now because it feels a huge pressure right now from all these emerging companies that are trying to, as they say, unbundle a bank. Again, what is missing in this picture? Well, perhaps the most important lesson here is that even though there is a huge amount of new companies that are trying to enter this field or actually are trying to establish themselves successfully, there is no single leader here. No company that can claim itself to be a new generation of a digital bank, something that Amazon has become for retail, or Google has become for publishing and advertising, or Apple for mobile, or Uber for taxi. Every time when you see disruption happening at a large scale, there is always a leader which tries to, which benefits from the new business model and new technologies, and it tries to consolidate that around its operations. In this case, we don't have that leader yet, and that, on the one hand, it's an opportunity for smaller companies perhaps to develop a new business model or consolidate many of these technologies into something that will become potentially leader in the future. But for now, it just doesn't look like that. The presentation that was shown before by Life Sreda, the reason why I asked that question about whether you think that it will be an established bank or a new fintech company which will become a leader, I think it goes to the core of the current discussion right now, whether all these new companies that have emerged over the last 5-6 years have a potential to get consolidated around one or maybe two major leaders who will present a real competition to the existing banking or not. Well, right now, I haven't seen that kind of leader, and nobody has yet, but maybe the new technologies that are coming around will help this company to emerge. Before I move to a discussion of the additional trends that might affect the future of banking from the technology point of view, let me first point out that banks, the entire field of financial services is being transformed regardless of whether new technologies will be able to disrupt it or not. There are four major forces that are now working to change the entire field of financial services. First is changing customer expectations. It's basically the generational trend that is forcing banks to innovate regardless of the technologies, right? I have a daughter, 5-year-old daughter, who we don't use TV at home, TV cables. And the first time when she saw the TV cables, she was really infuriated with the fact that she could not pause the TV. You know, she's so used to watch cartoons over her iPad that she just didn't understand the concept of not being able to pause the channel. And that's what is happening right now with the new generation of users that have a very different expectations from the older generations about how the financial services have to be delivered to them and what kind of value they can get from those services. So regardless of whether the technologies will be disruptive or not, the new generation of users will inevitably demand a higher services from banking, and the banks will have to deliver to them due to the internal competition within the industry. And those of them who will be able to satisfy the expectations of younger generations will emerge as winners. The second trend, of course, is the technology itself, and I will talk about it a little bit later here. A third big trend, which is a big obstacle, of course, for all newcomers in fintech, is a tighter regulation. And in many areas, actually, in the United States specifically, regulation and compliance requirements are becoming tighter. And in Europe, there are similar trends as well. What we see specifically happening is that customers are asking for more ownership of their data. This discussion about the ownership of data has become a very big issue in the United States, particularly as a result of the emergence of such companies as Google and Facebook that have built their entire business models on trading privacy in different ways. That is not something that obviously works very well with a lot of their users. And there was this big debate between Tim Cook, the CEO of Apple, who claims famously that Apple does not use any private data of their users and does whatever it takes to guard that data, protect it. And the founders of Google and Facebook about the privacy concerns of their users. And of course, companies like Facebook and Google and many other companies that are actually have built their entire business models on trading individual privacy. There is a big debate about that. And of course, as a result of that debate, specifically in banking, the customers are now becoming much more sensitive about the ways how their private data is being moved around, or especially if it's being used for commercial purposes. So we can only expect even tighter regulation on that front in the future. And of course, there is a new competition as well in financial services. There are new players who are trying to enter the field and trying to compete with banks and insurance companies on their turf. And that is a big pressure on the banks as well, which is kind of separate, I would say, from technologies per se. But let me talk in the rest of my presentation just about the impact of new technologies. And I will discuss just a few trends. I don't know how much time I still have left, maybe like more 5 minutes. Yeah, okay, thank you. So just about technology. First of all, where's the most promising, the first most promising trend, I would say, comes from artificial intelligence. And the reason for that, why is artificial intelligence has become so popular now, and it was not such a trend even like 3-5 years ago? Well, first of all, it's because of the availability of big data right now that has proliferated. Big data has proliferated through different vertical markets and has become so available that the machine, you can now feed computers with lots of data, and the computers can learn quickly. You can create the algorithms that can learn from that big data, and that has become a big, one of the big reasons why AI has now started attracting a lot of attention from investors. Another reason for that is that the new computers, new machines have become capable of processing that data. It was not the case even 10 years ago, not even 5 years ago, but now what you see with big data happening is that artificial intelligence is becoming a practical opportunity for businesses, not just some kind of futuristic trend. And when you look at the whole field of artificial intelligence companies, you can see that now there are hundreds of them being financed with venture capital money. Machine learning is probably the biggest trend within artificial intelligence because that provides the most practical outcomes right now that you can get. A friend of mine, I'll just give you one example, is using a service from a company that has built its entire business on artificial intelligence when he is trying to schedule his appointments through artificial intelligence agent. You don't need to have a live person anymore to schedule your appointments. That is already being taken care by computers, basically. The volume of investment has risen pretty dramatically if you compare it just 4 years ago in artificial intelligence particular. This slide is specifically on artificial intelligence. I'm sorry that it's not showing the entire title here, but this is what is being basically what is happening in artificial intelligence and financing. And major areas of impact that we are going to be able to see in the near future in financing will come from smart financial decisions, robot-enabled banking, and there will be a whole discussion here from what I saw in the program about this, so I'm not going to speak too much about that. Wallet, artificial intelligence, compliance and reporting that can be automated now, and that might actually become a huge opportunity for smaller fintech companies that have always seen compliance and regulations as a big stumbling block for them to enter different regional markets. Well, perhaps AI would be a solution to those companies who can make compliance and regulatory requirements a part of their artificial intelligence business model. The second trend, which is very promising, of course, is Internet of Things. It has become very popular again very recently for pretty much the same reasons. It's because the industry is now actively adopting sensors, and this this graph shows almost exponential growth that is being expected from in the deployment of financial devices across banking and insurance, specifically in insurance, actually. So, Internet of Things is becoming a reality right now before our eyes. And again, if any of you here are working on the ideas or technologies that fall, broadly speaking, within Internet of Things type of technologies, now is probably one of the best opportunities to do fundraising for yourself. I'm going to show you the trends in funding right now, but the promise that comes from Internet of Things for financial services, specifically the biggest impact that we have seen when we organized a number of big events for our clients in insurance is that insurance is being completely transformed right now as we speak with devices that come from Internet of Things. Specifically, we're talking about data-driven automobile and homeowner insurance. Now you can have individual risk profiles developed through the sensors at your home or within your, that will be tracking your personal automobile driving habits, that you don't have to belong to a big risk pools and overpay for your insurance. And there are new companies now that are coming up with the solutions that are making insurance, individual insurance, but also commercial insurance, a much more viable, much more cheaper options than the traditional insurance companies can do. And all of that is based, generally speaking, on the trends in Internet of Things. Again, there are lots of companies right now, specifically in Silicon Valley, that are now attracting attention of investors. Again, there is no single leader here as well, because the field is so new and it's hard to determine who will emerge eventually as a big leader in Internet of Things. I would suspect that it would probably not come from the newcomers. It would probably be one of the established companies like Google. Google has recently been acquiring quietly a lot of companies in this area. Perhaps one of the most well-known companies here would be Nest Labs. I don't know if Nest Labs have been selling their products here in South Korea, but they have become pretty popular with their thermostat, smart thermostat in the United States. Now what Google has done by acquiring Nest Labs and a few other companies in this list is that not only they have access to our, I would put it this way, to our data online, but now they're kind of trying to get into our houses as well with companies like Nest Labs. And I'm not talking about some malicious intent or something. I'm just saying that companies like Google are best positioned to capitalize on the data that we can, that these companies can now collect about individual users, whether we are inside of our homes or we're sitting before the computers, or maybe when we're driving a car. So all of that data is becoming available to large players like Google or Amazon. And of course, they're the ones I suspect will emerge eventually as the leaders here. And that's why the banks should also be very much worried about companies like Google and Facebook perhaps as well. It's not because they are trying to create digital bank per se. All of these companies have kind of denounced the rumors about their intent to create digital banks. But the danger, actually, to existing incumbent players are coming from the fact that companies like Google and Facebook are now so powerful in collecting data about individual users that if they wanted to create some services that would run parallel to the existing financial infrastructure, even global financial infrastructure, they could easily do that, easily. And it's just a question for them when, not if. And I believe it's only maybe 3-5 years from now, and every company Google for sure and Facebook very likely, that they will create their own services that will be catering to the financial needs of the younger generation. That generation which is not interested in visiting banks and which is expecting, as I said before, much higher services, higher quality services from the financial industry. That's when the time of these companies, IT companies, will come. when the majority of users of the financial services will be these younger people. And that's, I believe that's what, according to some rumors at least, that's what is happening right now with many of these IT companies. The trend toward financing is also, in financing is also pointing to the fact that IoT is attracting, as you can see, more and more venture capital. The latest quarter that we have the data for, again, this is from CB Insights, as you can see, shows that it's almost the record quarter of attracted capital to Internet of Things. So again, the message here is very interesting. On the one hand, it's probably the best time to attract cheap capital, so to say, cheap, because there is abundance of that capital right now in the market. The bad news here would be that you probably don't know that what you are creating already is being developed by somebody else. We just don't know them because they're at a very, very early stage. So again, if you're raising capital, looking for new investment rounds for your company, one of the important tasks for you would be do a lot of research on similar companies that are being financed by the top venture capital firms. The good thing there is that there are not that many of those VC firms that are, that are financing the best deals. It's probably like a couple of hundred companies at most. And you can do your own research very quickly to see whether similar business models to yours or similar technologies are being financed right now from the top venture capital firms. A third kind of trend comes from virtual and augmented reality. Virtual and augmented reality are actually two very different trends, but very often they're being put together because they sometimes use similar technologies. For finance, virtual and augmented reality holds a particular importance because its ability to visualize data to the degree that we can hardly even imagine how this will transform our lives within the next 5-10 years. Data is driving pretty much everything in our today's lives, and the ability to process that data has become one of the stumbling blocks in human ability to become more efficient workers. And virtual reality and augmented reality is one of those trends that is really expanding our ability to learn and our ability to visualize data for ourselves. So this is a big trend, and again, to show you what's happening in financing, there has been a huge uptick in venture capital financing of virtual reality and augmented reality.
Dr. Kunov,
yes.
If I may, because of the time limitation, would it be possible to wrap it up in a few minutes?
Yes.
Thank you.
Just maybe one more minute,
sure.
And I'll be done. Thank you. Let me skip some of that stuff. The last trend that I would emphasize would be in biotech and the impact of biotech on finance. Perhaps the most interesting example there, very quickly, is what's happening with neural and organic interfaces. Right now, and I have seen some examples of that, which is absolutely mind-blowing, the way how humans can now interact with machines without having anything like this anymore, right? The new devices that are being developed right now allow individuals, allow human beings to organically interact with computers, meaning that you don't need keyboard anymore, you don't need even speech recognition devices anymore. There are already technologies out there that allow our brain to get directly connected to computers. And you can just imagine what kind of potential this type of technologies can hold for the future. including financial services as well. Because, well, one of the easy applications there would be, of course, that you can communicate with your robo-advisors without even having any kind of intermediaries. Like, basically, it all happens within our head. Some would think that it is like a very far away future. Well, the fact is that it's not really that far away. It's going to happen very soon. And it actually is happening right now. And maybe within the next 3-5 years, we're going to see these technologies being commercialized and affect the future of financial industry in a very kind of direct way. So the trend in financing is again very promising for those companies who are in that field. And I just want to thank you for having me right now. And I guess I'm finished. Thank you.
Thank you very much, Dr. Kunov. That was a very enthusiastic, in-depth presentation.